Alright everyone, Cowboy Trades here, welcome back to the channel for another update on Kadena. In this video I wanted to talk about Kadena's next move, a new macro price target that I have for Kadena's bear market lows, and also update the most recent trade that we entered over on this channel. So let's start off on the higher time frames and work our way down. Now starting off, if we look at this on the weekly, you can see at this moment in time that we have, like we talked about in the most recent video, one of the reasons why we were entering this trade is a plethora of different reasons. We approached, numerous trend lines, we approached the bull market support bands, we approached the EMA ribbons, which we'll discuss in 1 second. But more importantly for this chart, we approached this big volume cluster over here. And as you can see, we did tap it since the most recent video. We entered a trade on this and we did get rejected from the volume profiles, and we are starting to move back down. We talked about this in the prior video, but as you can see quite recently, since our most recent video, you can see that the Heiken Ashi candlesticks have actually started to flip red, indicative that we should be entering a new bearish trend on the higher time frames. Now, we definitely like to use the Heiken Ashis on the weekly, and a lot of the time this helps smoothen out the trend. You can see most of the time when you start switching back red for the Heiken Ashis, a lot of the time it means that you are going to be starting a new brutal move back down to the downside. It is very rare that you switch red on the Heiken Ashis and you only have like a tiny bit of momentum to the downside. As a whole, most of the time when this happens, you have some pretty sizable moves coming in for the market. And we've really just only started to flip red for the Heiken Ashis on the weekly since we got rejected from this volume profile. Now, like I said, there's a few other things that I did want to talk about. There are also 2 new trend lines that I did want to show you. We originally drew this out as a head and shoulders, which is no longer valid, but you can see this floor that was formed over on the 9th of May, back tested on the 13th of June. And backtested a few more times. We really rejected and nuked from this level, and quite recently we came back up and backtested this level. This was something I didn't talk about in the previous video, but another great reason why we obviously entered the trade back over here. We touched this trend line and started breaking back down to the downside, and we also do have this trend line on the weekly. If you're looking at it on the weekly, it might be seeming like it's drawn a little bit weird. If we come over to the daily, you can see candle body closes here, candle body closes, wicks, wicks, and as you see, as soon as we've lost this floor, we absolutely nuked. And you can see a beautiful back test right here, somewhat of a good back test here before breaking back up. And we are, at this moment in time, heading back down and touching this trend line. So what I will say is this isn't the macro price target that I wanted to discuss with you in this video, but one price target in the lower time frames I really want you to keep your eyes on is this trend line, which basically starts kicking in at $1.01. But more importantly, we also have $1, which is a huge psychological level. Tomorrow as well, we do have the CPI data coming in, and if this does come in hotter than anticipated, if this does start pushing back up month over month, then this $1 level may not hold, and we don't have much in terms of support beneath that $1 level holding us up until we do break down into new lows. Now, if I do clear this chart up quite quickly, we also talked about in the most recent video, another reason why we were entering the trade is we came into the bull market support bands, and we were letting you know in advance that I think we're going to get rejected from this, and this is going to be a failed move equals a fast move in the opposite direction. Basically, since we topped out for KDA round about $30, we only popped above this for a retest once up here at $10.30. Every other time we've come into this, we didn't quite make up to the long-term moving average of the bull market support band. So once again, we had a huge overextension above the bull market support bands recently, and if we do zoom in, you can see we are falling from them. $1.10 is where the short-term moving average is, and if we do pull back our chart and get rid of the bull market support bands, you can also see the EMA ribbons on the weekly time frame, another moving average that we have really not reverted back into since we flipped bearish a very long time ago. Now, we have reverted back into this. We've reverted to the weekly EMA ribbons. Another reason why we entered the trade. We were letting you know once again in advance that we were going to lose this, and we have started to fall and reject from this level. Now, let's move on to the next chart. In terms of the oscillators, there's still a lot of room to move back down to the downside. Let's start off with the stochastic RSI. Now, as you can see over here, the stochastic RSI crossed bearish literally at the exact top right here. So this was a great reason to enter the trade, but even still, the average of the stochastic RSI, the 2 moving averages are sitting around about 84 and 74. So, in general, we're still in this overextended level for the stochastic RSI, and we have a lot of room to move back down to the downside for the stochastic RSI. You know, I do think we're probably going to end up approaching round about 20, maybe all the way down to about 10 or 5 for the stochastic RSI. This is definitely not uncommon for the stochastic RSI. If we come over to something like Bitcoin, you can see it's very frequent for it to approach, you know, 99, 100, and then to basically go all the way back down to 0, 100, 0, 100, and then 0. So the stochastic RSI specifically for Kadena is telling us we've got a lot of potential room to go back down to the downside. The MFI, the money flow index, basically the RSI, but also takes into account volume overextensions in the market, is telling us that we're sitting at 59 right now. We're miles above the heart line, around about 50, and we do have a lot of room to move back down. And what's even more worrying is while the price is moving to the downside, the MFI is still pushing up, indicative that there are still, you know, people, retail traders pumping volume into this, hoping to keep the price up, but it's not working. And we do need more of a healthy correction, and we do need to see the MFI start to, you know, once again push back down to these lower valuations. Now, for the squeeze momentum indicator, this is really like a slow moving oscillator, and we don't have too much data traded for KDA over on this chart. So what I'll do is I'll come over to this chart and we'll load in the squeeze momentum indicator. But you can see, you know, at this moment in time, we're actually in light green for Bittrex, indicative, you know, just like we saw over here, we're in a bear market. As soon as momentum starts pushing up into slightly bullish territory, that is normally a sign that you're going to get an absolute meltdown to the downside. And obviously, if you're in a bull market, it's the complete opposite. A healthy momentum reset into bearish territory is often a time in a bull market where you see a huge move back up to the upside. But in a bear market, it's the complete opposite. So we're basically at this point where we've completely reset momentum over on the squeeze momentum indicator for Kadena, and you pair this with all the other charts, pair this with the rejection from the volume profiles, rejections from Trendlines coming down to the $1 support level, which we're probably going to lose, rejections from EMA ribbons, bull market support bands, oscillators overextended. It is not looking good right now. So what is this new price target I wanted to talk about? Well, if we do pull up KDA BTC as a precursor before we talk about that price target, you can basically see, you know, the lows that were established for Kadena against Bittrex around about this valuation down here, about another 43% drop to the downside. And even if you're not looking at the lows, if we move this up a tiny bit, you can see support from these touch points over here. If we drag this out, you can see, you know, there's a decent amount of data traded in this green box where we've got data traded, rejections, held as support and moved back up. You can see support. So, you know, coming down to the bottom of this green box is where I think we're going to be coming down for Kadena. So this is going to be basically another 43% drop to the downside, meaning Bitcoin will outperform Kadena by 43%. And what does that mean for Kadena? Well, as I think BTC USD is going to be coming down, let's be completely conservative here. Let's not even talk about Bitcoin making new lows. Let's say Bitcoin comes back down and backtests its bear market lows around about 15,500. I do, of course, think Bitcoin breaks a little bit lower, 14,000, 12,000, 10,000 is also on the table. But for the sake of this video, let's just say Bitcoin breaks down 28%. And of course, if KDA BTC is going to underperform by 43%, this is basically, you know, 40% plus 30%. That is going to be a 70% drop from where we are right now. So let's come back over to the volume profiles. A 70% drop. What is interesting about this is if we take a price chart or a price movement and we come down, let's say we drop about 70%. Where is this going to line us up with? Well, you can see this huge volume profile is going to start loading in round about 32 cent. And we have talked about this level before, but we're starting to see even more confluence load in with this, 30 cent specifically. We talked about 32 cent before. This 30 cent down here is starting to look like a big magnet region in my opinion. So that's my next macro price target that I do have my eyes on in the higher time frames. Of course, I'm not saying this week, next week, this month, next month, we're going to just immediately nuke down down to 30 cent. I do think this is going to take a very long time for us to come down to 30 cent. I don't think this bear market is, 1 month, 3 months, maybe not even 6 months away from completing. I think we've got a decent amount of time left in this bear market, and until financial conditions start to pivot, until the Fed starts to pivot, until I start to see, all the information line up that I need to see, that financial conditions are pivoting, the stock market, equity markets are ready to pivot, bond markets are ready to come back down. If this is your first time on my channel, I don't just look at these cryptocurrency charts to formulate my opinion. I'm one of the very few cryptocurrency YouTubers that talks about, CPI, S&P 500 videos, bond markets, equity markets, all of these good things. I talk about many different things outside of just the cryptocurrency markets, altcoin markets, and I have a lot of different charts and economic data I use to formulate my opinion. This video, of course, is just focused on KDA, but if you want to learn more about my other opinions, be sure to follow me over on YouTube. But yeah, that's really what I've got. I do think we're coming down to 30 cent. And in terms of the trade update, we let you know the other week or so that we were entering this trade at $1.20 on a 2x leverage. My price target is unchanged. We've talked about these volume profiles all the way down here. And, the major volume profile target that I've got my eyes on is 50 cent. You can see the top of the volume profiles technically starts loading in at 69 cents. So if you want to front run the market, take a little bit of profit down here, that's up to you. I'm personally looking to target this 50 cent level. But as we are starting to move down at this moment in time, I do also want to incorporate a stop loss and let you know about that right now. So we are down 15% since we entered this short on a 2x leverage. That of course means that we're in just about 30% profit, tiny bit over, but 30% profit after fees. So what I'm going to be doing is I'm going to be incorporating a new stop loss. I'm going to be putting this in after I record this video. And what I want to do is I want to incorporate this basically right at these touch points down here, but just above this wick. In case the markets do have a little whiplash back up, I want to make sure that, if we do come back up and, double top of this region, even though it's not what I'm thinking we're going to be doing, I'm going to be making sure that my stop loss is just above where the rest of the traders will be having their stop loss at. So $1.15. This is of course just a worst case scenario type move, but 4.3% in the profit, and of course 2x leverage. This will mean that worst case scenario, we're now realizing 8.6% profit on this trade. Once again, just because I'm putting a stop loss in does not mean I do not think that we're going back down to the price targets that I've mentioned. I'm a conservative trader, and if we do have a trade that is 30% in the profit, I do of course want to make sure that even if I'm wrong and the markets turn around on me, let's say hypothetically something like this happens, not what I'm predicting, but we bounced on this trend line and start breaking back up to the upside. This is not what I'm thinking is going to happen, but as we're in 30% profit right now, there's no reason we shouldn't be walking away with any profit in the worst case scenario. But in the immediate short term, my price target's unchanged. I still think we drop about another 50% down to the 50 cent target. And of course, like we talked about, this new price target all the way down round about the 30 cent level is definitely something that I've got my eyes on. I think 30 cent, 32 cent, and also 50 cent are going to be a magnet for the price action. So that's all I've got for this video. I may incorporate some new stop losses in the next couple of days. Of course, we've got the CPI coming out tomorrow, so if that does come in hot, if Bitcoin does start breaking down, if the equity markets start breaking down, and Kadena just starts absolutely nuking to the downside, I will make a trade update for you and I will let you know, hey, I'm going to be incorporating a new stop loss. I'm going to be, making sure that I walk away with even more profit in this market. So for right now, my stop loss is basically going to be exactly at $1.15. I'm going to lock in that take profit as soon as I've recorded this video. So that's the update. That's my new price target. That's what I think Kadena does in the immediate short term. But for today, my friends, that is all I've got for you for this update. As always, if you do enjoy the content, let me know down below by leaving a like and a comment. Share the videos with your friends. And if you do want more of my posts, charts, memes, economic data, all of that good stuff, be sure to follow me over on my Twitter at 618_cowboy. Come and join the Discord community as well. If you head over to my YouTube and click on the About section, you can see all of my official links are down below. Twitter, Discord, Instagram, and the merch store. Do be aware though, There are a lot of scammers of me as my profile does grow, so do be aware. If you follow me on social media, I will not DM you first. It's very rare that I get time to respond to my DMs. I do have a lot of them. And also, if you come and join the Discord, I will never add you. If you look in the YouTube comment section, make sure that it's me responding to you. I'll never give you my WhatsApp, I'll never give you my Telegram, my phone number. Just be aware, there's a lot of scammers in the markets recently, so yeah, do be safe, but for today, that's all I've got. It's been your boy Cowboy Trades. I'm out, my friends. Peace.